Hi, this is Zak Mir with the Bulletin Board Heroes here at Box Markets for Thursday, the 19th of January. Starting off with the FTSE 100, were slightly disappointing, but not surprising. That decline from near record levels, near intraday record levels. We've got bearish divergence there, so the higher prices for January, but lower RSI trace that we've had over the near term. 77.30 was our favored support area, and I suppose we're not too far away from that. Below that, 76.80 at that old September resistance line projection, and hopefully we won't go lower than that. Worst case scenario at the moment is down to 7600, which is the floor of that rising trend channel from September. Still can't rule out the move to 8,000. We were looking for that to happen by the end of next month, and at one stage it looks as though it might happen by the end of this month, but maybe the first call was right there on that potential move to record levels. Moving on to the DAX, which has been pretty well aligned with the FTSE over the recent past, but here we had a big breakout, not obviously at record levels here. We've got the initial January resistance there around 14,800, so we're not far away from that. After that, down to 14,700, and then the worst case would be down to the 50-day moving average, 14,500. Probably favor 14,007 really as the potential decline level. Again, bearish divergence, so higher high for the January action, but we'll see if we can get the thing back on the front foot over the next few days. The culprit in terms of bringing the DAX and the FTSE down has been the Dow. And here we always had the fear that we might have to test the 50-day line or even the floor of this rising trend channel from October. And that's basically what's happened. We've got the risk of a further move down towards the 200-day moving average at 32,400, but ideally we find support just below 33,000 over the course of the rest of this week or early next week. On the upside, that big barrier there, 34,600. So that is the level to grapple with. And maybe for the time being, we're not looking at the top of that channel from September up to 36,000 because it might take a bit of work. On to Bitcoin, which high hopes are there for this market, given the pain that we had last year. Here, still consolidating within what could be described as a bull flag or a mid-move consolidation. Got support there at 19,500, which is the 200-day moving average. Want to see an end-of-day close through 22,000 really to give us a new potential leg up to September resistance at 23,000. Big picture target, if you're a fan, would be by the end of next month we head up to 30,000, but lots of work again to do with this market to get up to that zone. But we made a good start and probably the best start one would have expected for 2023. The 200-day moving average, they're rising slowly now from around 19,500, and if we can get more of that upside in terms of the trajectory of the 200-day line, that would really help the cause as far as a Bitcoin revival. Onto the stocks, and not too many stocks today, so we're looking at a few repeats and a few of the better performers of the recent past. Here we've got Cadence, which has had a great breakout so far to start the year. Support here towards 14, and above 14 we're looking for as high as 25, and that could be seen by the end of next month. So a very nice looking picture there at Cadence. A stock which I haven't covered recently, I think probably, obviously you can see by the way that chart's gone, probably wasn't a great prospect over the course of the summer and the autumn, but here we've got a W-shaped reversal, neckline resistance there around 3.5 pence. Above that we're looking for the 50-day moving average now just under 4.5 pence, and that was kind of the support on the way down as well. So maybe a little run up there for eEnergy, helped by bullish divergence, the uptrend line there in the RSI window. So looking rather better there while we're above 3.5 pence. Genedrive managed to miss yesterday, which is rather irritating given that it's up nearly 20% today. But the turnaround here with the rising 50-day moving average, bounce off the 50-day line there, the blue line there around 10 pence. And the longer we stay above the initial January resistance at 13.5 pence, the greater the chance of a move up towards the 200-day moving average at 17 pence. After that, we're into the low 20s, which was July August resistance for the shares, but the key here is staying above 13 pence as long as possible. A stock which, again, I don't normally look at, and Don't normally go to the shops there either, given that a bar of chocolate costs nearly £4 or something like that. But here with Hotel Chocolat, we've got a beautiful turnaround, extended bull flag here. And I think we had a gap up to the upside there last month as well. So things looking really good. The cost of living crisis apparently not harming this company. End of day close above the January resistance around £2. Could be enough to get the shares up to the top of that rising trend channel from July as high as £2.70 by the end of next month. So surprisingly good look there to that chart. Stock which we've covered quite a lot here is Hvivo, and here the shares trading after a what looks like a triple unfilled gap to the upside. So major re-rate in progress there. Just want to see the shares break the 17 pence level, that resistance line there from April. If they can do that anytime soon, then we could be looking at a new and decent leg to the upside, which would be up towards the line I've drawn there up to 25 pence. So basically breaking 17 pence, looking for 25 over the next couple of months, and support really there just below 14 pence and the last gap in the first instance. Highlight of the day and star of the day is Kodal Minerals by quite a long shot, and very pleased that the last time I looked at the shares, that the idea was, that was when I interviewed the company last time, the idea was that the shares were bouncing off the floor of that falling trend channel from the summer of 2021. That theory proved to be correct, especially as the shares were the most oversold as they have been for quite a while. Today, obviously, great news. What we want to see, though, is an end-of-day close through 0.35, maybe 0.36, and then that would give us a retest of 0.45, which was that spike in November 2021. This stage only well below the December peak there at 0.28, really upsetting the big breakout argument for Kodal. Another stock which doesn't get much airtime but is here on a quiet day is Kooth. Here we've had the sideways shuffle off the 200-day moving average at £1.54. Above that, we're looking at the top of that rising trend channel from June as high as £2.50 over the next 2 to 3 months, so maybe by the end of March. So reasonable risk reward on that over the near term rather. Next up is Luceco, and here another break of the 200-day moving average, in this case at £1.10. The view now is that a break above the old September resistance at 118 could take us up to at least £1.50 initially, maybe by the end of this month, and then there's a gap to fill up towards 180, 190 by the end of next month. But the upside value while we hold above the £1.10 area and the 200-day moving average. One of the worst falling knives of the recent past has been Morses Club, but it's up 50% today. Maybe those 500 quid punters trying to just bottom fish the shares have got the shares up. Here a bit of a bear trap reversal back above the old December support at a penny. If we stay above a penny, maybe you could tighten that up to 1.2 on an intraday basis, then we could retest the recent resistance for the shares up towards the 2 pence area, but obviously highly speculative and not for widows and orphans. Might actually create a few widows and orphans, that one. On to TAP, which has resumed its good start on the market. Here we've got, we were hoping that after breaking that line of resistance there at 4.75, we would find support there, and that just about happened. I think the mid close low there around 4.7. Above 4.7, looking for the shares to hit the top of that broadening triangle from the beginning of last year as high as 6.5 pence over the next few weeks, maybe by mid-February, something along that time frame. Looking on to the last stock of the day, one which I notice hasn't had slapped by the bears in quite a long time, which might be the reason why the shares are going up. Here we got Verditek breaking that 50-day moving average there at 0.7 pence. Above that, we're looking for the shares to hit the top of that rising trend channel from October as high as 1.4 pence over the next 4 to 6 weeks. That's it for me today. More updates tomorrow.